Hey everyone, welcome to another edition of the Buddy Study Group. And today we are joined by Darcy Soltis of Manhattan Life, and she is going to be walking us through their exciting short-term care product, OmniFlex. So if you haven't heard of OmniFlex since it's new-ish, this will be a really good session for you to take part in because it's a very competitive product with a lot of compelling offerings. And I know many people are starting to put their hat in the ring of the short-term care arena. So, Darcy, really appreciate you being here. And whenever you're ready, you can take it right away. You'll have to come off mute. Oh no, have I put her in a box? I'll, I think if I hit the ask to unmute button, you might be able to just unmute with a click. Maybe not. There
Sorry
you go.
about that, Jason.
She's free.
Oh my goodness. There's always something fun with technology, right?
Yes, there
Well,
is.
thank you all so much. I really appreciate your time today. I was fortunate enough to reach out to Jason and Mark and say, hey, I'm getting a lot of requests here at Manhattan Life from our folks who want to hear a little bit more about this short-term care on a national platform. So thank you for having me. I'm delighted to be a part of it. Some of you might remember me from Mutual of Omaha. I spent a very long time there doing the long-term care. And so when I got this opportunity to move over to Manhattan Life and learn not just about their short-term care product, but several of their other ancillary products, and to try and grow those sales, I was very, very excited to do that. So let me start just by telling you a little bit about Manhattan Life. We are a company that's 175 years old this year. So it's a big anniversary year, and that is a long time to be in business. So we might be that small giant based in Houston, Texas. People say, well, why is it Manhattan Life? Well, it was based in Manhattan up till about 30 years ago when our current owners, a family, the Harris family, purchased Manhattan Life and moved it to Houston, Texas. So about 800 employees are based out of Houston, Texas, half of which speak Spanish. So if you do run into any clients and you need assistance with any interpretation or Spanish brochures, Manhattan Life is a great carrier for you to help that community as well. Now I know we've got a lot of experts on the phone, so I'm not going to go over these cost of care numbers with you, but I did leave this slide in simply because I wanted to let you know that short-term care is a very inexpensive alternative to long-term care. So this probably will not cover those costs year in and year out for, a super long time. But what it is going to do is provide your clients some amount of coverage for up to 1 year in a facility and then 1 year at home. So if you stack those the right way, that's 2 years of care. The typical claim time somebody is on claim is about 14 months. So this will cover your typical client for the time that they are on claim. And it's a fraction, about 25% of the cost of a long-term care policy. There are a lot of folks that can really benefit from this. I also will bring up the fact that 94% of the applications we receive in-house are approved and coverage is offered. So we're taking a different risk pool than a lot of your carriers. And you might want to start with us just by looking at some of your declines and having us run those through either our trial process or do an electronic application, and hopefully you'll get approval from us on your clients. So give us a shot there if you haven't already. Now, I'll go through these basic plan features. If you have any questions, please type them in the chat session. Jason, you can either throw those out to me or I can, get through the presentation and look at those and try and answer all of your questions at the end. Also, if we have an opportunity, I'd love to take you through our Agent Resource Center. That's our portal, which when you become contracted with Manhattan Life, we're going to set you up with an agent number. And with that agent number, you're going to have access to our quoting and enrollment system. I will tell you, I have a lot of experience in the industry. This quoting and enrollment system is about as good as it gets. It's really a super duper tool. In fact, for the e-signature, all we require is mother's maiden name. So we don't even send an email saying to the client, please authorize your signature. Literally, as you're going through this application, either online with the client, you're going to use their mother's maiden name, or we also have a really cool feature that you can send a link to the client and they can fill out the application in their own time, in their own space, in their own way. And then as soon as they press send, it goes to you. You would click your signature on that and it comes to Manhattan Life. So pretty easy. Like I said, we issue 94% to 96% of these within like a 3 to 5 day. So very quick turnaround. It's not automated underwriting, but it's really as close as you can get. We do about PHIs, personal health interviews, on about 5% of these. So a very low number even go through a personal health interview. If your client is one of those lucky personal health interview folks, and typically it's because we're seeing on the prescription background check 3 to 5 prescriptions and they told us about one. So then we've got to follow up. But if they're one of those few individuals where we do call them, we're just going to stick to what we're looking for there. We're not taking them through the entire application and going to ask them all those questions. We're just trying to fact find and get to the answers we're missing out on. All right, so the basic plan features issue ages 45 to 89. It is simplified issue, and I'll go through some of the underwriting questions and how the underwriting is laid out here in a second, but definitely simplified compared to what you might be used to on long-term care. We do have a 30-day free look. That's standard. We also offer on this product a prescription drug benefit. So this is a great way to, I like to think of it as a rebate, put money back in the hands of those clients. So they're getting part of their premiums back in the prescription drug benefit, which I'll go over here in a second. And then this product is guaranteed renewable. So as long as they're paying premiums, they're going to continue to have a policy. Now, I'll just throw out one of the favorite questions that everybody in our industry likes to ask, and the question of rate increases. Is that possible? Has that happened? No, it has not happened, but we haven't had the product a super long time. But I'll tell you from a pricing and actuarial vantage point, the likelihood that a short-term care policy would have rate increases is much lower than a long-term care, simply because when we price this, we know that the length of benefit period that it will be, and we can mitigate what that cost would look like in the future. All right, so some of the features also include an application fee. I always bring this up. It's just a $25 one-time fee that the client will see on their first premium. There is a, short-term care rates vary by state, but when we go into the illustration software, obviously it will figure for your state, for your zip code, the correct pricing. And if for some reason the product is not approved in your state, it won't allow you to quote in that state. So we've got some ways to check that and make sure that we don't pick up some applicants in error that the product is not available for. We also do offer a spousal discount. So this is for any husband, wife, 10% off both of the policies if they both apply and are approved for coverage. So, some rules around that: must be married, live in the same address, and issued policies on both. So just baked into the plan there. And then the real plan, to let you know, the base plan is a facility care benefit. So the home health care is a rider, and I'll get to that in a minute. And it works really similar to the base plan here for facility care. But when you purchase this plan, you are for sure purchasing some amount of facility care. Now, that amount can be anywhere between $50 to $400 a day. So I've designed some of these plans where somebody really was wanting to purchase extra home health care. We have people who actually have long-term care plans and they say, okay, I'm nervous about the elimination period. I'm going to buy this plan in conjunction. They might only buy a $50 facility plan and then really beef up the rider for a $300 a day home health care plan. That can be done. There's lots of different ways to personalize this and customize it. Elimination period. So on both the facility and the home health care, the elimination periods are 0, 20, 60, and 90 days. Now, I will tell you that most of the applications we see get issued at a 0 elimination period. So very different from your maybe long-term care plan where you do a 90-day elimination to keep the costs down and the premium in line with where the client needs to be. Because of the cost of this product, it's very affordable, very manageable to buy a 0-day elimination period, and the people that are purchasing it really see the value in that. Benefit period, I had mentioned up to 360 days or 1 year. We do also have 90-day, 180, 270. So again, another way you can position this is if you've got somebody with a long-term care plan and it's a 90-day elimination, maybe you only want to buy a 90-day benefit on this plan so that you know that they're covered up to that point. We also have a lifetime maximum benefit period. And this comes into play because we do offer a restoration of benefits. So if somebody goes on claim and they're in the facility for 3 months and then great, they get better, they get out. 6 months later, that benefit has completely restored again to the benefit period that they have. Now, we do max that out at 2 times the benefit period. So for this facility example, the 360 days, it would be a max of double that amount. And then the policy is ended. Bed reservation baked into the policy, it's 10 days. So if you've got an individual who's already in assisted living and they have to go to the hospital, that bed that is then held for 10 days for a maximum lifetime of 20 days. So again, just kind of an added feature that's nice for clients. A couple built-in features, I had mentioned a prescription drug benefit. Now, this is really cool because I don't believe it's offered on any long-term care plan, but it is offered on many ancillary products and health plans. So that's kind of where this idea came from. But we offer a $10 generic and a $25 brand reimbursement for any prescription fill, up to $300 per policy year. So this is not when they go on claim. This is the minute they buy this policy. They need to be giving us or taking a picture and upload. We have an easy upload system to upload that prescription, and then we'll be able to pay them back for that fill. The other built-in benefit that we offer is called the Fast 50. Now, this comes into play, especially if you have a client who did buy a elimination period of 20, 60, or 90 days. Say, for example, they don't want to wait out that 20, 60, 90 days. Either in the facility or on their home health care, they can opt to take 50% of their daily benefit without fulfilling that elimination period. Now, if they switch from, having this Fast 50, and then they decide, okay, now I want to go to the full amount of benefit, they would have to sit out that elimination period. So that's the caveat to that. But the real benefit, the real value in this is that if you have a client who just wants to receive care from their spouse or, somebody they know and comes in, then they can get 50% of the benefit and they do what they want with that benefit amount. We just need to know that somebody was there caring for them at that point in that day. And then I should also mention, because we get this question a lot, is this a service day or calendar day elimination period? And it is a calendar day. So we're marking each day from the date of claim, as a elimination day. Restoration benefits. Okay, so talked a little bit about this with that lifetime maximum. It just restores those benefits. If somebody gets off of claim and they're doing okay for 6 months, then they go back on, they've got their full benefit period. So a really nice perk to it. I always like to think of, how is this product maybe different from a traditional long-term care policy? I We see a little bit more flexibility in when people will go on claim and use this, right? So you might have somebody who had a knee replaced, and then they go home and they're having trouble getting around or performing some things around the house. Definitely, that would be somebody who might go on claim and they might only need it for 2 weeks. They might only need it for a month. And then this policy would pay out that amount of daily benefit when they are at home. So I think that's something that we see a little bit more of is people on and off claims for different reasons than that of which you would see on a long-term care policy. So the home health care rider, as I had mentioned, it looks and feels a lot like that facility benefit. We've created it and made it very similar, so it's easy to understand. You can pick between $50 and $300, so a little bit different there. The facility went up to 400. This is a max of 300 when you apply for the policy. Now I'll get to an inflation option here in a second for that amount to grow from, but the base policy can be 50 to 300. Elimination periods, same periods there, same benefit period amount, although it does not have to match what you signed up for on the facility. So these are very different triggers for different things here. And then the lifetime maximum benefits the same as well. So some of these things that, we just put down what typical cost is of home health care. If you have a home health care aide come in, what that looks like if it's a physical therapist, the expenses there, what that looks like. And just to have, a nurse or somebody come in that's a home health care aide, these can all add up, be very significant if you don't have any additional coverage, as many of us know. So this graph here is in the brochure for the client as well as the agent guide. And I really, really want to take a second to focus in because it explains a lot about how we've designed our product here. Now, we do offer a simple inflation, not compound, but simple inflation. Only one option, 5%. And so this chart is going to give you an example here of what a client who applied for $200 worth of coverage, what this benefit is going to look like for them. So the one thing that I really want to make sure we understand here is that with an OmniFlex plan, if you apply for a $200 benefit, day one, once this policy is issued, if something happens and you need care, we pay out 50% of that at $100. So you can see from that chart, the light blue line there, it's going up 20% per year over the first 5 years. So it's grading up. We do this because it really helped us be able to price it in a way and take on additional risks, right? So we know that, we're building up to this benefit of $200. Now, when they get to the beginning of year 6 and they've got that full $200 benefit and they've added on this 5% simple inflation, it will take another 20 years for this to double their benefit. It's an option. It works a lot like what you would see on a lot of the long-term care policies out there, where that benefit then grows over time. Now, I will tell you, from my observation playing around with the software, I always think that it's, the client gets the best bang for their buck if they pay for the maximum benefit that they can get in the beginning, as opposed to doing this inflation option. So on this example, if you had somebody who truly wanted a $200 benefit, it might be a great idea to look at doing a $400 benefit and no inflation rider. You're not paying for that inflation rider. So, I always say play around with it, give the client a few options, but certainly, they can double the monies over the 25 years. Another rider that we have on this is our hospital indemnity rider. So, if some of you are familiar with what a hospital indemnity rider does, it just pays out again a set amount of money for the days you're in the hospital. So, this is huge, especially for people right now, ACA or any major medical plan. These premiums are going through the roof, these deductibles and copays. This is a way to manage that. We have a standalone HI plan and it sells like gangbusters, especially right now because people are, adding this onto their ACA plan or just a regular health plan. Really nice that our short-term care policy has this rider on here and it is very inexpensive. I'm going to spend a couple minutes after we get done with this just showing you the quoting tool and you'll get an idea for the pricing. But again, definitely worth mentioning, between $50 to $300 a day every day you are in the hospital, 3, 6, or 20 days. So, that's going to depend on how much it costs, how many benefit days, you want on there. But there's also a lifetime maximum benefit period of 180 days because obviously, this is not just one time to the hospital. It could be that, you go back and you spend additional days there. So we're maxing out at that 180 days. Another popular question I get is, where is this approved? So I do have a state approval map here for you. This gives you an idea, pretty much what you'd expect if you're familiar with short-term care. We are continuing to, knock on doors and try and get some more approvals, but at this point, it's looking like this might be it for a while. Application. Now, as much as I love to talk about the e-application because it is a great process, we do have a paper application. And if you were like me, you want to at least look through the application, look through the questions before you just start doing an online enrollment. So we have that paper application. You can fill it out that way, send it to us, fax it, email it. We'll process it the same way, but it's not as easy. And it obviously doesn't have like those IGO triggers that will not let you go any further if you forget something. Health questions. This is another area where I get a lot of questions about what this is going to look like. So we do have a two-tiered underwriting system. The first is part one, and here are 5 questions. And you can read through them yourself. We're really trying to dig into, is there a pre-existing? What does that look like? What major health conditions? If any of these are answered yes, these are knockout questions. They are not eligible for coverage. But if they get through these and they're all no's, then they go to our second set of underwriting questions. Oops, sorry about that. The second set of underwriting questions, they answer yes or no, but if they happen to answer yes to one of these, it does not mean that they're not eligible for coverage, but it does mean we're going to limit their coverage amount. So the maximum they would be eligible for is a $100 facility and a maximum of 100 at home. And the inflation rider would not be an option. So we're limiting our risk on what we would offer at that point.
Darcy, my biggest question, this is Linda Tallheimer. I
Linda.
think this product is absolutely fabulous. There's no question. That's what scares me. I'll be honest. The biggest thing that scares me is that this is too good to be true. So, for example, a 60-year-old male or female, so there's not even they're gender neutral products,
Yep.
start on day 0. And as we know, the difference of increasing the risk of claim is 33% if you go from a 0-day to a 90-day. So you're increasing the probability of going into claim by a third over traditional policies. And if I did the maximum amount, so I figure 60 years old, by 65, they start to get inflation. By age 85, they're now in claim. So they paid in 25 years, right? So if we pay in 25 years times 2,200, they paid in $55,000 to the company. The company's paying off commissions. They've got all their expenses, and they're paying out $378,000. in the most likely scenario that anyone will use long-term care. I mean, I feel like I'm going back in time to, you know, how can a company do this? I mean, that is the only reason I'm not selling a product. And I sell it primarily to those who have no other options. And I say to them, be prepared for at least 100% rate increase, because I'll be honest with you, this is way too good to be true. And I don't know how a company can offer this level of benefit over premium with simplified underwriting, gender neutral products, and 0-day elimination periods. So please help me understand.
Well, I'm not the pricing or the product actuary on this, so that might be a better question for them. But I will say in the product design, you have to remember, we've got that 5-year grading. So, we're really looking and protecting our risk those first 5 years. And then, in the example of, your person, I don't know how often that particular example would come up. So that's the ideal example, right? Is that somebody bought this, they bought the 5% inflation, they kept it until it doubled in benefit. I don't know, what they figured in for a lapse before that happens and if that factors into the pricing. But I'll tell you, like I said, Manhattan Life's been around 175 years. They have products out there. Our final expense products been out there for 20 years. Never had a price increase in 20 years. We have a affordable choice health plan. We've had it. It's our flagship product. We've had it 15 years. That's another one that people go, this sounds, too good to be true. We have a home health care plan. And that product is as close to guaranteed issue as you can get. We ask 2 questions. One, if they're currently living in a facility. The second, if they are having somebody help them perform their ADLs. If they answer no to both of those, they are eligible for coverage. So,
How long has
I
that
don't
product's
know.
been in effect? How long that home care
The
policy?
home healthcare's been around a very long time. We just refreshed it to the home health care select, added some additional riders, but I mean, 20 years, probably 15, 20 years. So the new one has only been around 3 or 4 years, but we're actually making some updates to that as well. And that product works a little bit differently. It's not exactly like this product, but we do tell people if you can't qualify for this product, then you should look at us definitely for the home health care. And we get a lot of people who are declines on this product in that product. So good question, Linda. I'd probably want to ask our product team and get back to you on,
I would
exactly.
love that, because I would love to have the confidence to sell this and not say I have no idea what the future holds, because I can't understand how a company can offer this much benefit for so
Yeah.
little premium.
Well, we're only paying out for 1 year of benefit too. So
But exactly, that's my point, right? So you're paying out the most likely scenario. So all of your money is in that first year, right? So if I compare this to any other long-term care product, it's a slam dunk over a 2-year or 3-year traditional long-term care policy that is a 90-day waiting period. So, to have front loaded in a year with a 0-day elimination period for a similar pricing is like, that's where it comes into play. Like, how can they front load a product like this? And the most likely was simplified underwriting.
Yep, yep. Great question. I will say the other thing I know from all my years with the long-term care experience was what really, caught a lot of carriers off guard was the tsunami of Alzheimer's, dementia issues. And so again, with a short-term care product with a limited benefit period, you're taking out some of those catastrophic, unforeseen claims that are going to be on the books for a very long time. So, but more to come. I like the question. I want to get you a better answer.
Thank you so much.
Sure. All right, so a couple of resources that we have. I'm going to show you our agent resource portal. Quickly here in a second, we do have agent guides, brochure, and then we have an OmniFlex FAQ. So some of those deep dive questions that you might also have, we can get you a copy of that, but there's the QR code to those FAQs. In addition to that, we have our sales support team. We call them the ACEs because they're pretty amazing. So please feel free to jot down this 800 number or their email address. They are there Central Time, 7 a.m. to 6 p.m. They can take any questions. If you can't get a hold of me, this is a great team that can, even if you're not at a place where you can get onto our agent resource center and you want to order some supplies, give them a call. These are your internals. They don't take calls from clients. They just talk to agents all day. So they're an awesome resource. And then I'd be remiss if I didn't mention the fact that we do have amazing trips too. So two different trips. We have a chairman's trip and a president's club. They just have different levels to get to each one of those. They are truly top-notch trips, amazing. The president's club will be in Mexico in 2026, and chairman's club or qualifying period of 2026 to 2027 is in Madrid. So just a little bit of information there. So I'm going to stop sharing this, and I am going to share with you my agent resource center portal here. And in the interim, if you have any questions, please feel free to ask.
We did have a couple of questions asking about is this an indemnity plan versus reimbursement? And what are the benefit triggers for this plan?
Okay, so this is a true indemnity plan. It will pay in addition to any other policy that you already have set up that's paying. Now, we do need to see, like it, for example, the home health care. We need to see an example of a bill or knowing that somebody has actually going to the home and they're taking care of you. Now, the clients can either choose to have benefits assigned to them and then they pay it, or they can have us pay the benefit to the caregiver and they would get the difference of that $300 a day. So I'm using the example of, say, for example, somebody purchased $300 a day. We know it grades up, but in year 6, they go on claim. They want to stay at home. We're paying $300 a day. We're not going to only pay $50 because that day was $50. It's $300 a day. We just need to know that somebody was there for the day. If they choose to take that fast 50, right? So they're at home. Again, they're year 6, $200 a day benefit. They do home health care, or they decide to do that fast 50, which is $100 a day, and that will be paid out per day, and it could be their spouse that's taking care of them. And I looked into this because I'm like, well, how do we know? How do we determine that? And they just need to fill out a chart basically that is part of our claims process, saying, like, writing in there who was in there, a signature, date, time type of a deal. Great question. Any other questions?
I think
All right.
that's all we have. Yeah,
Okay, cool. Now, Jason, can you see my Agent Resource Center screen?
I can.
Awesome. Okay, so I'm not sure if you've had a chance, if anybody on the line has looked at this. I would think many of you have, especially if you've written one of our plans, but this is just a wealth of information here. You can go in and look at your sales, your commissions, your in-force business. We have a lot of agent tools, including, say, a media library. This is really cool. You might want to use some of our infographics. Here you go. There's a lot of different great things here for social media. We're happy to partner with you and want you to co-brand. So those are some really great things. We also have a media library where you can send a short 3-minute video on our short-term care to your clients. It's client approved. We also have our download area where you can download any of our forms. So if I go in here and I look at product download, and I'm in the state of Nebraska, so I'll just pull that up. you will see that it has every brochure we have, both client approved or just agent approved, the application, they're all out here for you to get that PDF. So pretty easy to access that. Now you can tool around and then always come back to this dashboard. This will be the main screen. And on this main screen is really, the bread and butter to this whole thing, which is our quote and enroll system. So I'm going to pull up quote and enroll just so you can get a feel for what this looks like. And I'm going to go in and do my zip code and my date of birth. We'll just quote this on Darcy here. And again, great point Linda made that this is unisex pricing. And I should also mention, we do list bill. So if you have a small group, even 2, 3 people, and you want the employer to pay, we can set that up. That's easy. That's very manageable at Manhattan Life. So think of us in those situations as well. Okay, we're going to look at the OmniFlex. This just asks if the spouse is applying for coverage, and I will say no at this time. We have 2 options. I'm just going to quick quote this for now since we're just kind of looking at different scenarios. So here we start off with the facility benefit base plan. Let's go and we'll do the $200 since we were talking about that. $200. Let's do a year benefit period, 0 elimination. And then it's about that simple. Let's look at the price down here at the bottom. For me, 53-year-old female, $33 per month. Now we're going to add on some riders. So let's do the home health care benefit. We know how important that is. Let's go all the way up to $300 benefit on that for a year, 0 elimination. And that took it to $53.81. So a lot of different options. We talked about that hospital indemnity. Let's just put that on there. Let's say we want to do a $300 6-day benefit period. That took it up to $68 a month. And then the simple inflation protection, you will notice this, probably not surprising to many of you, really raises that premium up quite a bit to $108 per month, but still, very much in line. Like I said, this is maybe not for everybody, but you certainly have a pool of people who probably need some sort of coverage. They need additional coverage to what they already have, or they're in poor health, and this is something that is, achievable for them to receive this type of policy. Now, then you can go to when you're working with the client over the phone, say, for example, look here at the in bottom of this, you can answer any health questions right there. If you'd like to actually enroll them and go through the application, click on this enrollment. The other option you have as a client is you can create a link. So if I would have went through here and filled this out, it would show here as showing up in my cart, because with our products, you can actually apply for several different products, but it comes out on one application through this process. You will get a link, and then this link is something that you can easily email to the client to have them fill out on their own and then send back to you when they're done. So that's an option as well. Any questions on this as we walk through the quoting tool?
Did we address the benefit triggers question?
Okay, run by me again. Benefit
Somebody
triggers.
wanted to know what the benefit triggers are.
Well, like you can't perform 2 of the 6 ADLs. So it's just exactly like your long-term care plan.
And severe cognitive impairment
And
applies as
yes,
well.
and severe cognitive impairment, correct. So it's pretty much standard on that platform. I will say the other thing that has been kind of refreshing, we process all of our claims in-house. So we're not outsourcing any of that. We don't have a TPA. We're used to processing a lot of claims because, like I said, we have a lot of these ancillary products. So one of the technology features Manhattan Life is put in place is on your phone. There is a smart app. You go to Manhattan Life and it's called Easy Upload. So with this easy upload, you just take a picture of any of those receipts or benefits that you're receiving, and it sends them right to Manhattan Life and we pay that claim. And the claims get paid within usually a week. Now, if we have to look at like a pre-X situation or any research, that's going to be a little bit longer, but typically the claims process is a very quick turnaround. Again, we're seeing kind of a little bit different types of claims where it could be somebody who just had a hip replacement. That could maybe they might be on claim for a couple weeks, couple months, but it's not necessarily your person who's going on claim one and done. We can see folks on this policy actually receive care at home, get off claim. Maybe down the road they have something completely different. Maybe it's related to the same thing, but then they would pick up back on their claim period for whatever their benefit period is, up to that 2 times lifetime maximum.
So we
Good
had a couple
question.
more questions come
Sure.
in the chat. So is it a 90-day certification for need of care? If so, how does that work if we're, say, only covering like a couple of weeks in a benefit period? We can start on that one and then work to the
Okay.
others.
I guess the question is on a 90-day elimination period.
So the essentially the 2 out of 6 ADLs needing to be for a condition expected to last 90 days or more.
Oh, I mean, no, it is not. But again, you could have this policy as a 0-day elimination period. So if you have somebody who that was their scenario, they're just going to have a knee replacement and it's a 90-day elimination period, they might opt to do that 50 fast, the fast 50.
I think what they're looking to find is like, again, related to the benefit triggers. So, say for traditional long-term care, any 7702B long-term care, the 2 out of 6 ADL trigger is supposed to be for a condition expected to last 90 days or more. Is it the same definition for
I
Manhattan Life?
I'll have to check on that. I do not believe so, but I will double check. Great question.
And then there was a question about can you do both group and individual plans or just individual?
Well, we underwrite individually on this product. So you would have to go through that process and issue individual policies on each person in the group, but we do have list to bill. So we can set it up to pay as a group, but to do the underwriting and issue policies, it's going to be separate contracts.
Okay.
Good question.
I think that's what we've got for now.
Okay. Well, if other questions come up, please feel free to reach out to me or to the other members of our team. I know some of you probably work with my counterparts, Kemp and Aaron and Delise. We're here to help as well as our ACEs team. So let us know. I appreciate the interest and your time today. And hopefully, like I said, this can be, one more arrow in your quiver to be able to offer clients.
Awesome. Thank you so much for taking the time to present today, Darcy. Really appreciate it. And like she said, if you have any questions, do not hesitate to reach out. Otherwise, I think if there are no other questions, that's all I've. Oh yeah, Darcy, would you mind dropping your contact information in the chat in case
Yeah,
anybody needs to read?
absolutely. I
And
would.
for those of you who have an existing BGA, make sure to contact your BGA for any contracting questions. Go back to them first to see if you can get an existing contract with your BGA and see if there is a wholesaler that works with your BGA, just so we can keep all of the streams running as they should. But Darcy will put her contact info in the chat. And then, yes, our annual market review is Thursday, January 8th, and Gretchen has posted the link to that to be able to register. Now, if you join us regularly on the Thursday study groups, you won't really have to do anything different. It's same bat time, same bat channel. But if you would like to pass that along to somebody who you think would benefit from being there, definitely pass along that registration link so that they can join.
Thanks, Jason.
Of course, needs to be some shameless plug time.
I like it.
All right, let's see here. Awesome. Okay, so
Okay. I
there's
think, did it? Yeah.
perfect. There's Darcy's contact info if you need it. And I think that'll do it. So thank you
Awesome.
everybody for being here. We really appreciate it. Here for anything that you need. Be well, and we'll talk to you this time next week. Have a good one.
Bye. Thanks,
Bye.
everybody.